Phatak, CFO, Hindustan Unilever. May I request Srini to brief us on the results and then we can open up for questions. Over to you, Srini.
Thank you, Prasad. Good afternoon, ladies and gentlemen, and welcome to Hindustan Unilever's March quarter results briefing. Thank you for taking time to attend this session. We do hope that you and your loved ones are safe in these current circumstances. COVID-19 has had an unprecedented impact on the people and economy. So I speak on behalf of everyone at HUL in extending our deepest sympathies to all those who have been struggling to cope with the crisis. Equally, we stand in awe and express our gratitude to all those who are working heroically at the front line in managing this pandemic. I will start by giving a bit of a market context, and then I will really move on to talk about our performance. As you are aware, the macroeconomic context has been challenging for some time now, even prior to the outbreak of COVID-19. The slowdown in the market growth was visible in the first 2 months of the quarter, with greater deceleration in both discretionary and rural. If I have to give you some numbers, the market growth in the March quarter was below 2%, with volumes being at 1%. And if you really look at the month of March, it was more pronounced, with the market growth actually being in the negative territory. The market slowdown obviously was exacerbated with the virus outbreak and the ensuing national lockdown. Right from the middle of the month, we had seen many containment measures coming into being, such as sealing of borders or closing of public places, which impacted the operations. Further, in all of these unprecedented conditions, the volatility in crude and currencies had increased multifold. That starts to give you a bit of a flavor in terms of how we had the market context. Now, if I come to HUL performance, I think the headline really would be that the COVID disruptions actually impacted our performance. And I think we want to break that into two aspects. One, to really talk about the health of the business and the robustness of our performance, and then to give you a flavor in terms of how the disruptions led to an adverse moment. First, I think if you have to call out, our performance has actually been quite competitive in this context. In the quarter, we actually gained market share of about 50 basis points at a corporate level, with close to 80% of our business actually retaining share. We'll also notice that progressively, as conditions have become challenging, our performance has actually been gaining relative to the competition. However, for the reasons that I explained, that the disruption started right from the middle of the month, and there was a pronounced impact after 25th, these disruptions resulted in our underlying sales declining by about 9%. Pretty much after the 25th, our operations had come down to zero levels. I think it's also important to give a bit of a flavor to our performance. On a normative business, given that the market growths were about 2% and we were gaining share, it would be reasonable to expect that our growth would have been in the range of about 3% for the quarter. Versus that, you have seen that we have reported a decline of about 9%. If we were to give you a flavor of what the difference would be, we believe that half of this loss of sale can be attributed to reduced stock levels at our distributor locations as our primary distribution network got disrupted. The balance would really be from lower stock at retailer level and loss of actual consumer demand. You will appreciate that in some categories such as ice creams, out-of-home categories, and skincare, their sales had pretty much come to negligible levels. And here it will be difficult at this stage to predict how much would really be a retailer stock buildup and how much would really be a loss of consumption. So if I have to give you a summary, our performance in the quarter from a top-line perspective has been competitive. With respect to bottom line, we delivered an EBITDA of 2,065 crores. Our profit after tax but before exceptional items was lower by about 8%, and our net profit was down by 1%. If I have to give you some flavor of the bottom line, we had some inflation in our commodity costs. We had many items going up, such as SMP, vegetable oils, year on year. But many of this got mitigated through an aggressive savings program, which continued to deliver well for us. We had continued to invest behind our brands in March quarter. We had not pulled back our spends. We had focused on reach and maintaining the right share, and that was important for us. It was also critical given that we were actually going into a season for our skin cleansing business, and for our ice creams into the quarter, we had to support our brands with the right levels of spend. Obviously, the loss of sales with our investments levels sustaining has meant that we have suffered deleverage. So predominantly, if you see from a bottom line perspective, it is the deleverage impact which has come in and impacted in our net profit being 1% lower. This is also a time to really give you a picture about our full year results, because March quarter also culminates into our full year. And overall, if you see, our performance this year has been resilient, profitable, and competitive. For the full year, our domestic growth stood at 2%. Our comparable EBITDA margins expanded by over 100 basis points. Our profit after tax but before exceptional items grew by 11, and our net profit actually grew by 12%. So it was again a strong year of double-digit bottom line increase and with strong generation of cash. Taking into account all of these factors, I'm pleased to share with you that the board has recommended to increase the dividend, the final dividend, to 14 rupees. This actually translates into a 14% increase for the full year. This is a reflection of the strength of our portfolio, our brands, and our balance sheet. Looking ahead, I think it's important, and I think what is first and foremost is really navigating the COVID-19 challenge, and this poses the biggest risk as we look into the future. In these times of extreme ambiguity, our purpose and strategy will help us come out stronger and serve the needs of our consumers. We are moving with speed to support our multiple stakeholders, maintain our operations through the crisis, and prepare for growth in a new normal. In this regard, we have structured our immediate response into 5 areas. First, supporting our people. Second, protecting supply. Third, serving demand. Fourth, contributing to the society. And 5 is maintaining and protecting our financial model. I'll give you a little bit of flavor on these 5 themes before we go into Q&A. Safety of our people has been the first and the foremost priority, and this applies as well to our people who are working with us directly in our operations and who work through other third parties in different parts of our business. We are one of the earliest to implement work from home for all our office-based employees. We have implemented strict standards of access control, social distancing within our supply chain, and made sure that we provide necessarily personal protection equipment as well as higher standards of hygiene and sanitation. We've also taken various measures to support our business partners, which includes providing special medical coverage insurance to the frontline people, and this covers more than 20,000 of our people. Yeah? So that's, let's say, a flavor of some of our initiatives with respect to people. On the supply, we have been working with various authorities to scale up our operations. We are about 70% of our normative levels as we speak, and we are hopeful of improving this in the coming days. In the hour of the need, we have ramped up our capacities in key categories such as sanitizers, hand wash, etc. Some of the increases, for example, in sanitizers have been by a factor of 60x from the pre-COVID levels. We are also operating with shorter planning cycles and stepping up agility and building resilience in the supply chain. The third aspect is really about demand. Demand patterns are changing, and we are likely to see an upswing in categories like health and hygiene and nutrition. In the near term, we are also likely to see some adverse impact in discretionary categories and the out-of-home channel. We are staying close to the consumers to adapt to the emerging patterns and bringing in relevant innovations to suit us both for the short term and for the medium term. To give you some examples, even from a communication and brands point of view, we have made a lot of changes to our communication, and Surf has actually changed it to "Daag Ghar Pe Hi Rahenge" to reinforce the need to stay at home and address really the opportunities. We've also launched a range of SKUs in sanitizers in a record time to help our consumers. In the next few months, you'll also see many more products coming in the space of health and hygiene. This includes Lifebuoy Germ Kill Spray, Domex disinfectant sprays, Domex germ removal wipes, Lifebuoy cloth sanitizers, and Surf Excel anti-germ wash booster. So a whole host of activities which have been taken in this regard. In this time of the need, HUL also stands with the community and with the society. And to this extent, we have actually committed 100 crores in our fight against coronavirus. And this is actually including a whole host of our activities, right from building awareness, reducing the prices of our essential products, working and collaborating with various institutions and government bodies for strengthening the infrastructure and creating awareness. Our partnerships include partnerships with UNICEF, with BMC, amongst others. And on the last pillar, as we enter into the crisis, our strong balance sheet and cash really positions us well, and I think will also be a source of a competitive advantage for us. We are reviewing systematically all areas of cash generation and usage and re-evaluating all costs in light of these circumstances so that we can continue to invest behind our best opportunities. We continue to set a high ambition on savings across the value chain. Therefore, in summary, if we look ahead, I think we go into unprecedented times with a lot of unknowns. It is difficult at this stage to estimate the timeline of recovery, given that we are still in lockdown and the number of positive cases continue to rise. We will continue to be agile and responsive, and we will continue to manage the pressures both from a liquidity as well as a volatility. Our approach will be to really protect our business model, grow competitively, and contribute to the nation. Our portfolio of trusted brands, financial stability, and quality of leadership teams will position us well to deal with the crisis and for the changing world that will come afterwards. We also remain confident of the medium to long-term growth prospects of the FMCG sector. That, I hope, gives you a picture in terms of the quarter performance and looking ahead. At this stage, I will hand it over to Prasad and the operator for Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Priya Seth from CNBC. Please go ahead.
Good evening and many thanks for taking my question. Firstly, I wanted to ask, first, can you break up the growth that you've seen in urban as well as rural India? How have both the markets been growing? What is your expectation from the monsoon on demand going forward? And secondly, you also announced the completion of the GSK deal. So what is your sense in terms of revenue expectation? Is there any change in SKUs or distribution strategies that you have planned?
So I think let me just break up a couple of aspects of your question, and then I'll also request Sanjiv to add his comments. If you see that the overall market had been decelerating for a bit, and therefore when I talked to you about March quarter, the total market growths were about 1.6, rural was much lower. And when we talked about March, and I said that the overall market growth was negative, rural was even actually in the negative territory. So both from an urban and a rural perspective, we have seen deceleration to growth. However, if you actually look at the situation after 25th, I think we're not in a new normal. The operations have been completely disrupted, and which obviously means that today it is very difficult to really put a number to in terms of market growths. We continue to see a lot of disruptions. We continue to see that operations are not normal. So we'll have to monitor this for a bit before we can get a read in terms of what happens. The second aspect is you talked about potentially on rural and monsoon. I think there at this stage there are some headwinds and there are some tailwinds. Monsoon, if it lands well, I think is going to augur well. I think that's an important piece, and we have seen some of that come through in the past. So that I think should be a positive and it should help. We are confident that the government will initiate many measures from a rural sector point of view to support lives, to support livelihoods. That should also be a positive. So these are, let's say, some of the tailwinds. If you see from a headwinds perspective, I think what we have seen is really a massive dislocation of people. And in the temporary basis, we have seen a lot of job losses and employment disturbance. I think it's difficult at this stage to estimate the wealth effect or the income effect. And this is going to be another factor that we need to observe closely. Before I go into the GSK question, I'll request Sanjiv to provide his perspectives and comments, because GSK is a very separate piece and we can address that differently. Sanjiv, over to you, please.
Hi, Priya. Good to have you on the call. Yeah, as Srini alluded to, if you pick up the story, what are we talking about? Just before the outbreak of COVID-19, we had a scenario where the markets were slowing down. And if we look at the last 3 months of February, ending February, and compare that with December quarter, then we were still seeing that the market slowing down from the December quarter. And if you recall, the decrease of market growth was more accentuated in rural than in urban. That was the scenario when COVID hit us. Now, COVID has implications on several. The immediate impact in the month of March was predominantly on the supply lines. Yeah, the supplies got disrupted. And then later on, as we went in for a national lockdown, it would have also have got impacted by the demand. So at this scenario, if we look at it at this juncture, there are many variables which are very difficult to predict at this stage. A lot will depend on, the trajectory of the virus, what are the success of the containment efforts, which till now I would believe that the government has done a tremendous job. Then, the severity and duration of the economic impact. And also very importantly, with economic activities slowing down, there would be an impact on demand. But the critical question will be, has the demand been deferred or has it shifted? Or are we talking about whether the demand has been lost? So very difficult to predict at this stage. But before we go to the monsoon, I think the critical part is the harvest which has happened. And I do hope that we have sufficient number of people engaged in harvest. And then it's very important that the produce is taken to the mandis and the farmers get the right kind of realization so that they get income in the hands. Yeah, that would be the story for rural.
Yeah. So your question, the next question was really on GSK. As you're aware that the merger has become effective from 1st of April. I think it's also a very good acquisition and a fabulous piece for us because nutrition becomes another important aspect as people think in these terms. I think health, hygiene, and nutrition are really the key focus areas from a consumer point of view. And therefore, I think the expanded portfolio serves us well to meet the requirements of the consumers. We are very, very optimistic and hopeful on the medium-term potential of this category. It's a low penetration category. And therefore, I think the structural demand drivers are intact. And we are working through plans to really take Horlicks forward. I think what we need to counter, for the reasons I think Sanjiv explained, I think there is an immediate piece which we need to watch out for, which is really on supply certainty and what it really does in terms of demand. I think we need to really counter that phase in the first phase. But I think from a structural benefits perspective, consumer relevance point of view, and the fundamental attractiveness, I think there is no change from a Horlicks point of view.
Yeah, just to summarize what Srini has said, Priya, we are very pleased with this acquisition. And the prospects of this acquisition in our portfolio hasn't diminished at all. There might be short-term hiccups linked to COVID-19, which is something which will apply to most businesses. But we are absolutely delighted getting this great nutrition brand into the Hindustan Unilever portfolio.
Any revenue outlook that you can give us owing to this deal?
It is extremely difficult, Priya. There are so many ponderables at this stage. like I talked about, we don't know what is going to be the trajectory of the virus. How long would the government have the lockdowns? And post May 3rd, in what way the containment efforts will continue. So it's extremely difficult at this stage to predict what is going to happen. But what I think you need to look at from when you look at HUL, that first and foremost, we have a very strong balance sheet. Second, we have a great number of brands which cater to the needs, heightened needs in the entire area of health, hygiene, and nutrition now. And third is, we have great talent and we have a very resilient, I would say, a pool of talent. And we would do our best to remain competitive during these challenging times.
Thank you. Ladies and gentlemen, we would request you to stick to one question so that we can accommodate questions from all participants. The next question is from the line of Shubhra Tandon from Financial Express. Please go ahead.
Good evening, gentlemen. I wanted to understand that when was the last time when the volume growth saw this kind of a trajectory decline?
Srini, do you think in the demonetization quarter, perhaps?
Perhaps, that was perhaps the last time. Suman, will you have a number ready made? But broadly, that would be the right time, Sanjiv.
Yeah, that was just one quarter.
Okay. And what is the, now, how much do you think that, the pain is going to continue and before we see things improving? Is there a timeline that we could have?
Extremely difficult. But before I go to the point, I'll just again amplify what Srini talked about. That if you look at the quarter, we are talking about, 9% negative top line growth and minus 7% volume. What we were alluding to is that the markets were growing at about 2% and we were gaining shares. And if we were gaining shares, the normative growth for us, value growth should have been about 3%. And there is a spread between volume and value of about 2%, so you can gauge where the volume growth would have been. But we landed up at about 9%. So that means there's a spread of about 12%. And if we break up this 12%, 50% of this 12% is our distributor stocks have come down. We have about 3,000 distributors and we work with a certain stock now. If you look at it from a beginning of a quarter to the end of the quarter, half of 6% is clearly contributed by the distributor stocks coming down. Out of the balance 6%, our assessment is that about 2/3 of it is attributed to the trade stocks coming down because we were not able to, our distributors in turn were not able to feed the trade when things came to a halt or when there was big disruptions. And the balance, about 2% point, would be because of the offtake diminishing in the last month. That's the kind of scenario. So going forward, situation will be very different because it's difficult to fathom at this stage. And, when the lockdown happened, the operations came to a near standstill. And slowly they have been moving up. And now we are somewhere in the vicinity of 75-80% of a normal operations that we have been able to run. But we don't know to what extent the trade pipelines have come down. Our assessment is they would have come down significantly. And we don't know to what extent the demand would have been impaired and whether those demand is because of non-availability of stocks or because for more structural reasons. And you will have to wait for some time till normalcy happens and we are able to run our business at the normative level, then we will get an appreciation of what is happening to the demand.
Yeah, okay, thank you.
Welcome.
Thank you. The next question is from the line of Nachiketa Perikar from The Week. Please go ahead.
Hello.
Hi.
Hello. Yeah, I just wanted to check. You mentioned about the supply and logistics bottlenecks that happened after the lockdown was announced. So, has there anything been done on that? You mentioned you were in talks with authorities. So, has that supply bottleneck being addressed?
Absolutely. When the lockdown happened, that time we came to a near standstill. Our operation in the first few days were running at about just in the vicinity of 5%. And since then, we have now moved to a stage where we are operating in the vicinity of 75 to 80%. So things have definitely improved with all the steps that the government has taken to ease the economic activities and taken concrete steps. From our side, we have taken a lot of steps. One is to ensure that our factories run with as minimal number of people as possible. Second is we have highest standards of safety and hygiene in our operations and clearly laid down standard operating procedures, which we have also shared with other industries so they could emulate. And not only that, we are also helping a large number of retailers in the market to practice to run their business, keeping in perspective the need for social distancing and a very high hygiene standards. So we are doing a bit to ensure that the business starts operating, but operating keeping in perspective the risk and the new measures that need to be taken to operate under the current circumstances. Yeah?
Thank you. Yeah.
Thank you. The next question is from the line of Bhuma Srivastav from Bloomberg. Please go ahead.
Hi, good evening. So I understand there was a lot of disruption on the supply chain side and the production side, logistics moving. Did you see any bump from panic buying? Is that something that you anticipate when things ease up a little bit? That's part one. Second part would be on the tea business, which the parents said they will be reviewing. Has any kind of guidance or steer come down to you on that? Thank you.
See, I'll take the second question and then, Srini, you could talk about the first question. As far as tea is concerned, you would recall that Unilever has announced that they are doing a strategic review and there is no change on that. It has been maintained that a strategic review is being done. But let me clarify, a strategic review does not mean that any decision has been taken as yet. So that process will continue. And then at an appropriate time, Unilever will announce the decision.
Yeah, sorry, I had a bad line. What was the first question? I missed part of that, please.
You want me to repeat my question?
Yes, please, if you don't mind.
Okay. Yeah, sure. So I understand the disruption which has come as a result of the lockdown on the supply side production. But did you see any instance of panic buying, people hoarding, which in turn may actually bump up the volume sales maybe once the lockdown eases?
So I think let's break this up into two. Today, as I think Sanjiv said, in many cases, the stock at a retailer level have come down significantly. What has happened during at the onset of the outbreak and during the course of the outbreak is wherever stocks have been available, consumers have tended to buy them. But typically, if you see, a lot of focus has really been on food. A lot of focus has really been on health and hygiene. So it was really a lot of sanitizers, a lot of soap, a lot of body wash. Consumers have first started to really buy some of these categories first at the onset of the outbreak and during the course of the outbreak. So that's where we had seen a bit of a loading of stocks, if you could say, from a consumer perspective. Having said that, in rural areas, we did not see a lot of that. Because rural has been struggling for a bit with low liquidity and low income levels. So that's actually the story which has happened if you were to look at the last 4 to 6 weeks. I think what is likely to... Sorry, go on, Sanjiv.
No, carry on.
Yeah. What is likely to happen, yes, once the lockdown, we come out of a lockdown and there is more normalcy to the operations, We do believe that first there will be a stock fill which will happen into the trade, and then consumers in due course will buy. I don't believe there is a need for a panic buying, because I think once we start to see streamlining of operations, they will be buying. But we do expect some bit of stocks to move in once normalcy comes in, because today a lot of the retailers are not stocked, or in many cases they're not open. Yeah, Sanjiv, your perspectives.
Yeah, of course, there is human nature that whenever there is a crisis and when you sense that there is going to be a shortage because of supply lines issues, then you would tend to lay your hands on as much as you can. But the real assessment of how much has been pantry loading by consumers would really, one would have been able to gauge if the supply lines were running in an uninterrupted fashion, and we would have got a good picture of what is happening to the trade inventories. Today, both these variables, have been very different. One is, of course, our supplies got disrupted, so we don't know if the normal supplies were there, how much would have been the demand. The second is, of course, that many stores were closed during a large part of since the 25th of March, and many which have opened. We don't know precisely to what extent the inventories have come down, and those inventories that have come down are because of supply constraints or because of demand moving up. It would really be linked to both factors. But I think let normalcy happen. Once the operations, we move up to 100%, then we would have a better pulse, a finger on the pulse as to what is happening to the innate demand and what is happening to the pipeline.
Sure, thank you.
Thank you. The next question is from the line of Neha Tyagi from ET Now. Please go ahead.
Good evening, gentlemen. The first question is, will there be any kind of impact on your strategy for FY21? Expectation is that the customers will continue to shop online, and like you said, discretionary spending will be curtailed. So how are you preparing for that situation? Are we increasing focus on online distribution, withholding innovations, etc.? So basically your strategy for FY21, if there are any changes?
Yeah, that's a good question. Srini explained that we are focusing in 5 big areas. And to recap them, one is the safety of our people. Second is to ensure that supply lines keep running. Third is to assess how the consumer behavior is changing and how do we meet those demands. The fourth is on community and how we help the nation. And the fifth is on protecting our business model and cash and liquidity. Now, when it comes to demand changes, there would be a heightened need very clearly for hygiene. There will be for nutrition products. There is no question about that. And as far as we are concerned, we would be willing to provide goods to our shoppers and to our consumers in whichever channel they would like to shop. There are, of course, 2 big trends emerging. One is the relevance of the humble grocer. Perhaps there could be a renaissance for the grocer. For India, they have always remained important. And I believe people have realized that they are so close to you proximity-wise, and they have such a big benefit. The second, of course, would be on e-commerce. Certainly, with people becoming more averse to stepping out, they would like to place the orders from home and receive it at home. So this should definitely give a fillip to e-commerce. And we would be ready for that. Even when it comes to general trade or the grocery channel, we have taken several initiatives over the past couple of years. For instance, we have something called a Shikhar app, where the grocer can place an order without a salesman reaching there. So that has become very relevant in current times. as things normalize, we have Hamara Shop, which clearly from a relevance and importance perspective, that becomes very strategic. So certainly, we would be adjusting our sales and looking at the demand patterns. We would be looking at how to reach the consumers in the best possible manner and doing our best to serve our consumers.
Sure, thanks. But just one more follow-up on the kind of measures that are being taken to minimize costs and spends. Are you anticipating any kind of salary cuts or job losses going forward? Given the situation, we don't have any clarity at this point in time when the lockdown will actually be, removed.
Yeah. First is the ethos of HUL is very frugal. Yeah, we operate in a pretty frugal manner. Second is we have a very close focus on each line of P&L. And we look at it very closely to ensure that they add value and drive value for the business. Now, we are at this stage, of course, we have not separated any people. Yeah. And but yes, there are costs which don't add value, like traveling and all. Even if you wanted to, there is no expense being incurred over there. But then we are looking at every line of cost in a very close manner and saying that under the current context, if it is not going to add value, then why should we be spending that money? So our focus is going to be on absolutely looking at every bit of it and ensuring that the strong business model that we have, we are able to preserve it. And also you will appreciate that we don't run the business in isolation. We have distributors, we have scores of suppliers, thousands of distributors, millions of outlets. And what we have to do is play our part in ensuring that the ecosystem also survives so that the business keeps doing well going forward.
So anything on the job losses or salary cuts?
No, right now we have not shed any jobs. And at this stage, we have not done any salary cuts. But I would not be able to say what is going to happen in the future because we'll have to see how the situation evolves. Yeah. If, for instance, the economy bounces back, then we are into business. Yeah. But if, for instance, we get into a deep recession, then we will reevaluate all the steps that we have been taking. But we always keep options open because we evaluate everything very closely. So we have to evaluate, we have the options that we could be exercised getting into the future. But at this stage, we have not shed any jobs, nor have we done any salary cuts.
Sure. Thank you so much.
Yes, any other question, my friend?
Moderator, you can take the next question, please.
Sure, sir. The next question is from the line of Ashish from Hindu newspaper. Please go ahead.
Hi. You spoke about many new products being planned to be launched in the health and hygiene segment. Can you elaborate a bit on that? And also, if this is going to be a long-term strategy or just for the initial few months post this, during this pandemic, do you think that whole consumer psyche is going to change over a longer period of time? Thank you.
Very difficult at this stage to see that the change in the consumer behavior, whether it's going to be long-lasting or people will revert to the old behavior and habits. But I think it's very important that right now the fear is real, right? No question about that. Then people are extremely concerned with, from a hygiene perspective, from a health perspective, and they want all the surfaces which they touch to be clean and hygienic, and they want it to be germ-free. And then also from a nutrition perspective, there is a very clear consciousness that you develop immunity. Now, many of these things would hold in good stead even after the pandemic has been brought under control, because they are the right behaviors. They would help them, the long-term health of the society. So to what extent they will last? For instance, sanitizers. Of course, now no one wants to move out without sanitizers. The moment you step out, touch any surface and soap and what is not available, you want a sanitizer. Yeah, but whether this demand for sanitizer will continue at this level, heightened level, difficult to gauge. And perhaps it will come down to more normal levels, but certainly at a much elevated level than what it was before. Just to give you a context, and from the what even Srini alluded to, is, compared to pre-COVID levels, say if you take up the same quarter last year or December quarter, our manufacturing of sanitizers has gone up by a factor of 60. Now, will this demand sustain at this level? Perhaps not, but it will certainly remain at a much higher level than what it was there in the past. And as far as innovations are concerned, we never divulge it till it hits the market, but I would say watch the space. And in this month, as the coming month, that's in the month of May, you will have few innovations being rolled out. In the month of June, there would be few more innovations being rolled out. And we are looking at it from the entire portfolio of what would be most relevant to the consumers during this period.
I mean, if I can just put in a follow-up question, how soon do you expect these new products to hit the market?
We would want it as quickly as possible. Yeah, of course, a bit of the delay was because the supply lines were disrupted. But like I said, some of the products should be hitting the market in May and some of the products should be hitting the market in June. And then there are some at the drawing stage which may take a few more months. But yes, we have devoted our entire focus on innovation which would be most relevant during these times.
Yeah. So we had also given some examples which I called out. And in the presentation which Arvind has shared, if you see in chart number 24, it gives you some examples in terms of germ kill sprays, disinfectant sprays, some germ removal wipes of the likes. So you'll also get a sense of some of these innovations. Either they're already in the market or some of these are coming into the market very, very soon. Yeah.
Okay. All the best. Thank you.
Thank you. The next question is on the line of Devanshi Asher from Z Business. Please go ahead.
Hello, sir. I'm Vanshi. So I just wanted to ask, most of my questions are answered, but do you believe that the next quarter is going to be a little more worse than the current quarter because April has already gone in lockdown and you are just left with 2 months? And would you be taking up any changes in the prices of the product? Do you believe there are chances that you might reduce the prices or there might be chances that you might increase the product prices right now?
The first is we don't discuss prices which are going to happen in the future in the public arena. And but at this time, we are not looking at changing the prices immediately of certainly the products which are most needed by the consumers at this stage. But pricing is based on many factors. Yeah, it is based on input costs. It is based on currency. So a lot of factors go into pricing, as you know. But clearly, when you are alluding to what will happen to the next quarter, even during the best of times, we never give a guidance. But during this time, it is we don't even have a picture of what is going to happen, say, after 3rd of May. It's so difficult to gauge, right? And so it would be very difficult whether would we be able to ramp up our supplies from the 75-80% to 100% and by when? And if once that happens, then we would, of course, try our best to fill up the stores. And then the consumers, pent-up demand will be there, and then it would be the normative level of demand, and we don't know to what extent the slackening of economic activity in the country has had an impact on the innate demand. So there are too many variables for us to hazard a guess, but what we will obviously do is keep doing our best so that we keep supplying all the essential which matter so much to the consumers as much as possible and as quickly as possible.
Okay, so just two more questions. One, how much has your credit days increased in this time? And second, post the lockdown, you have already mentioned that you would like your customers to go through any channel. But do you believe that post lockdown is a good opportunity for you to directly reach your consumers?
So maybe Sanjiv, I'll take the first one. So it's important for us to support our distributors because if you see large parts of the country, the operations are disrupted, whether it's physical operations or banking operations. So what we are doing is we are looking at the requirements of the markets, looking at the requirements of our distributors and supporting them with adequate credit. It's not a blanket saying that you need to increase credit by X number of days or Y number of days. I think where required, we are taking it up and giving a few days of credit to support our distributors. And depending on how the situation evolves, we will do more or less of it in a dynamic manner. But we are going to definitely support our distributors while being judicious about how we deploy credit. And I think it's working well for us. And I think that will also help us in restoring some of the supply continuity. Sanjiv, do you want to take the second one?
Sure. Our philosophy is very clear. We serve the consumers wherever they want to shop. And different channels have got different shopping missions at times. So people go to a big format store on certain occasions. They go to a neighborhood grocery on a certain occasion. But yes, this crisis will have a change. And I believe it would give a fillip to e-commerce. There's no question about that. But it will also give a fillip to whether it is the big box store or the neighborhood grocery to adopt technology and serve the consumers better. So I believe from a perspective of distribution channels, this is certainly a moment where adoption of technology would creep up, certainly, and people would do their best to make themselves relevant.
I'm conscious of time. Can we just get maybe two more questions, two more people?
Sure, sir. Ladies and gentlemen, we may request you to please limit your questions to one per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Nandana Jain from Hindu Business Line. Please go ahead.
Hi, sir. Just wanted to ask, there have been reports about the possible exit of GSK, so wanted to know HUL's response to it.
That's a question you should be asking GSK, not to us. If you want to talk about how pleased we are with Horlicks and Boost, we are absolutely delighted with the acquisition.
Okay, you had said that you have certain plans in mind for Horlicks, so will it be possible to elaborate on that?
That's a little bit long-term plan. That strategy doesn't change. Okay. And at an appropriate time, we will definitely share more with that. Yeah. Mm-hmm. And for us, it's a fabulous acquisition, great set of people, absolutely great brand. And we are delighted. And the moment could not have been more opportune when people need nutrition and people need to boost their immunity. So I'm completely delighted. But at a certain stage, we'll definitely share with you what our plans for Horlicks are. Yeah?
I just wanted to ask one follow-up question to you. You had mentioned that as for the outlook for the overall FMCG sector, it remains positive. Can you please elaborate on that?
That is, we always maintain based on the mid to long-term story of India and the penetration level of FMCG and the per capita consumption of FMCG in the country. Yeah, from all these measures, FMCG remains a very attractive, India remains a very attractive market for FMCG and for Hindustan Unilever. There's no question about that.
All right. Thank you.
Welcome.
Thank you. The next question is from the line of Raj Kumar from PTI. Please go ahead.
Hi. I just wanted to understand from you, Srini, you spoke about during the pandemic, people moving bag levels, migrating, etc. So how is HUL managing its production? Have you also faced these similar labor shortages like many other industries have witnessed? And when the new normal comes in, do you see those...
Sorry, your voice is completely breaking up for me. Can you repeat the question, please? Just struggling to hear you.
Can you hear me now?
Yes, please.
Okay, I was referring to the migration of labor that you mentioned about, and we also heard from many industries that they had faced labor issues, non-availability of workers. So how has HUL managed on that front? And when we come to the new normal, how and how many of your workers came back so that you can reach the full capacity?
So in the initial stages, I think given the lockdown, I think there was difficulties across all industries. I think what we're countering is a major pandemic. There was concern for people for health and safety, which affected that we did not have adequate people coming in. We had a lot of restrictions on movement. Progressively, that has continued to improve. I think Sanjiv has spoken about where in the initial days, maybe our operations were less than 5%. Today, they have moved up to more than 75-80%. So we have started to see people come back in. I think we have taken various measures with respect to their health and safety. A lot of work has been done in our manufacturing sites and operations in terms of preventive equipment, sanitation, the cleanliness. I think these all measures are giving confidence for people to come in. We've also put in many measures, and I've talked about, we even took out medical insurance coverage for people who are in our extended core. That means people who work with our distributors, people who work with our third parties. I think that's one of the largest programs with more than 23,000 people. I think all these measures have started to help. And I think as people are coming in and seeing that HUL is providing the best possible facilities to really take care of their health and hygiene, we are seeing this to build up progressively. So we are confident that over the next few weeks, this will continue to improve. And that remains our first priority. Therefore, safety of our people and getting supply continuity back to normal levels are what we're really focusing on. I think balance, we just have to wait, watch, and work it through.
I assume that right now about 70% of your workers are available with you, or is it that or a certain percentage of people are working double shifts maybe?
Yeah,
sorry, go on, Sanjiv.
Yeah, let me add. You know what Srini talked about is 75-80% of our normal production is happening. Yeah? Even at the beginning, it was less of an issue of our own workforce. Yeah, our workforce are heroes, absolutely heroes. And they were willing to come in, most of them from day one. But initial days, we were not even getting approvals for all the workers to come in because they had given us a limited number of permits. But we have been, even with limited number of permits, initially, we started becoming more innovative. And wherever the states where the laws permitted, we started having long shifts so that we could still run the production with a lesser number of people. But you have to understand that supply chain works in a synchronized manner. It is not just me who is going to run the factory. We have to get our raw materials, we have to get our packaging material. Those are different factories, and we have scores of suppliers who supply to us. And then initially there was a lot of issues with transport. Yeah, we were not getting transport, and then there were loading, unloading. And then you move to the front end, our distributors people, many of them were in the containment zone. Our distribution centers were not initially getting permissions. So supply chain works flawlessly when it moves in a centralized fashion. And things have improved significantly. That's the reason we are at 75-80%. And we would believe that this would keep improving.
We heard that some
Moderator, can we have the next question, please? Moderator, can we have the next question, please? We are running out of time.
Sure, sir. Ladies and gentlemen, we'll take the last question from the line of Charlene D'Souza from Bloomberg. Please go ahead.
Hi, good evening, sir. My question is, are across categories, is your production running at 70% or is it different across different categories? As you said, skincare, there's no demand. It doesn't fall under the essential goods at this point in time. Even ice cream for that matter. If you could tell us across categories what it's standing at. And my second question is the extent of goods that's reaching retailers at this point in time. Because we've been given to understand that only between 10 to 20%, that's the extent of goods that's being, depending on the order that's placed by the retailer.
I'm sorry I was not able to get your entire question, but I got a sense of what you were asking. So, our focus was also on manufacturing those goods which are most required by people at this time. So when we had limited number of people, our entire focus was in ensuring that as far as health, hygiene, those are the kind of products which we need to focus on so that we could maximize the production of that and we sent. Now, as far as skincare and all is concerned, for the first several weeks, we did not manufacture them, or color cosmetics, for instance, we did not manufacture them. So we don't even know to what extent the demand has been lowered. We believe there would be a lot of pent-up demand. Even when you are at home, you want to look after your skin. There's no question about that. And when people start wearing masks, it becomes even more important to look after your facial skin and all. So those demand, and especially because we have great brands and we are market leaders in most of the categories, I would believe that the demand will come back. And ice cream, you have to also understand that a large part of ice cream business is out of home. Yeah, we have thousands of trikes who move around cities selling our great brands of quality balls. And when all that came to a halt, it of course impacted the demand. And then of course we had to cut back on the production because we were into the peak season and we already had stocks. So there are different variables which have impacted different bit. The real shift in demand and the change of consumer behavior, we would be able to gauge only when normalcy happens.
Yeah. Percent of goods that are reaching the retailer currently, depending on the order that they...
Oh, they're moving. Whatever we sell moves on.
Received, or is it higher from those levels?
I think, look,
Charlene, your audio is not clear. What did you just
Charlene, what we're saying is both from, let's say, production as well as dispatch, and even if you see the secondary sales, which is from a distributor to retailers, is all coming into a good rhythm. I think the 70 to 80% range will broadly hold for all three components. Yeah. So thank you, Charlene. I also actually want to take this opportunity on behalf of Hindustan Unilever to thank all of you. I think from media and various parts of television and other, I think you guys are all doing a fabulous job by being out there in the time of this crisis and covering many aspects, both on economy, health and hygiene, and really, keeping people updated. So we thank you for everything that you're doing. We also thank you for taking your time out today to actually engage with us and better understand our performance and more importantly, the outlook. We wish you well. Please be safe and take care of you and your loved ones and wish you all the best. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of HUL,